I'm Doris. I'm here to share with you about my stock account. Today, my stock account has earned $240. US stocks closed down on Monday with the Dow Jones down 200 points. US stocks closed down on Monday with the Dow Jones down 200 points. The intraday S&P 500 was at its highest level in the 9 months. The market is focused on the Fed's policy meeting next week and its future policy positions. The S&P 500 briefly hit its highest point intraday level since August. Apple shares, which was closed down 0.76% after hitting a record high, unveiled its long-awaited mixed reality headset at its WWDC developer conference today. Financial stocks such as JP Morgan Chase and Goldman Sachs fell, dragging the Dow lower. There are reports saying that the U.S. regulators are considering raising the capital requirement for big banks. Ryan Dietrich, chief market strategist at Carson Group, said, after Friday's general rebound, the market stopped to reset. Today's market news is lackluster and extremely flat, but that's not a bad thing because it solidifies some of the big gains we have made recently. U.S. stocks closed sharply higher on Friday, with strong May non-farm payrolls data rose to 339,000 to the biggest pace since January, but the unemployment rate rose to 3.7%, the highest since in October, and the average hourly wages fell to 4.3% from 4.4% in April. In addition, the passage of a bill to raise the U.S. debt ceiling has also boosted market sentiment. President Joe Biden signed the Fiscal Responsibility Act to raise the debt ceiling, suspending the debt ceiling until January 1st, 2025, allowing the Treasury Department to rebuild cash to more normal levels. Mohamed El-Erian, chief economic advisor at Allianz, said, I think the market performance is appropriate, but there are some things that we still don't know, and the most important issue is the Fed. He noted that while some issues such as the U.S. debt default and the banking crisis have disappeared, the next important issue will be the Fed's goal of reducing inflation. If the central bank admits that 2% was the wrong target, he said, the market prices could appear fair. The Fed will hold its monetary meeting on June 13th to 14th. The Fed is widely expected to keep interest rates steady at the meeting, but keep the possibility for further future rate hikes. Despite last week's surge in U.S. stocks, investors are certainly concerned that the lead has led the rally in 2023 so far too narrow, with only a handful of tech stocks that have been driving the rest of the market, and worries that a possible medium-term correction if the breadth of the rally does not improve. Investors are worried that the end of the tech strength, thanks to the generative AI boom, the Nasdaq has surged 33% this year, well above the 11.5% of the S&P, while the proportion of the five tech leaders accounted for 25% of the index. The market began to speculate whether the strength will affect the health of the market, and whether it should take advantage to cash out. On Monday's economic data, the final market services PMI for May came to at 54.9, compared with the 5.1 and 5.1 last. The final market composite PMI for May was 54.3 versus 54.5 expected and 54.4 last. The U.S. economy continued to grow at a double-speed pace in May, with the manufacturing downturn in sharp contrast to the recovery in services, said Chris Williamson, chief business economist at SMCP's Global Market Intelligence. Businesses in the tourism, entertainment, and leisure industries are enjoying a small post-pandemic and leisure boom as consumption shifts from goods to services. Survey data suggests that annualized GDP growth is just above 2%, and the improvement in business expectations suggests that economic growth will remain strong as the summer enters. Yet, just as the demand has shifted from goods to services, so are inflationary pressures. While commodity price inflation fell sharply in May, with only modest gains, service prices continued to rise sharply. This is driven by a combination of soaring demand and insufficient operational capacity. The latter is partly caused by labor shortages, yet while revitalized service providers will be making a big summer break, weakness in manufacturing has raised concern about the resilience of the economy later this year, when headwinds of higher interest rates and rising cost of living could be a bigger impact on spending. That's all I have for today. Thank you for listening. Don't forget to subscribe to next episode.